Alrighty, hey guys, Johnsy here, and today we're going to be talking about how to use the XABCD tool as well as the Cypher tool for marking up harmonics on your charts. So when you open up TradingView, if you go on the right side, I have it kind of cut off here, but under the little text box tool, there should be one for patterns where you have this XABCD tool and the Cypher tool. I have these favorited because these are the two tools that I use for marking up my harmonics. You use the XABCD tool for harmonics where your C is below your A when you're dealing with a bullish harmonic, or vice versa if your C is above your A when dealing with a bearish harmonic. So those harmonics would be your bat, Gartley, butterfly, and there's one more, your crab. In terms of for the Cypher harmonic, you would use that on your Cypher as well as your shark, right? Because your C is going to be higher when you have a bullish harmonic, and it's going to be lower when you have a bearish harmonic. So let's take a look at a few examples of how you can mark them up. So right now we're looking at Euro to USD. Typically when we are looking at harmonics, we want to always pull from our swing points. So we would first be starting with, in this case, we're going to be looking at this potential, what looks to be almost like a bat, just looking at it based on my eye. So we're pulling from this swing low here, going to the high, going now down to the next major low, next discernible high, and then back down to the low. So in this case, this is a little bit further than your bat would normally go. Normally it would be a 0.382 to 0.5, but it's still within plus or minus 0.5. So that would be fine. This is totally valid, and this is valid as well as this. Typically it reacts from the 886, so 864 is totally fine there. All right, so this would be a textbook bullish bat harmonic. As you can see in this example, we reacted very strongly from the PCZ. The PCZ stands for your pattern completion zone. In this case, we didn't really have a proper confirmation low, and that sometimes happens. Sometimes you just absolutely rip. You might have on lower time frame. I apologize because this was a example from further back in history, so I have to go back to it. Yeah, so if we go down to like the 4 hour or something, we can see here you had that kind of lower, that pullback here that you could maybe argue would be your confirmation low, but sometimes you get more discernible waves. So that's why it's always good to look for confirmation on a lower time frame bias than your harmonic, because clearly we can see this is a more discernible on the daily. So the 4 hour would provide your like low time frame confirmation to look to get long. Typically then, if we're looking for targets, you always usually target your B, and I'll do these in just, I'll change the color. I'm not going to write TP because you get the idea. So that would be where you'd first look to TP. You also have relative equal highs. So you can combine like price action knowledge with your other sort of trading in terms of where else you would want to TP. And then here we would have our TP2 at C, which is also just a buy side liquidity level. And this would be TP3, which would be like your external buy side liquidity. In this example, we never made it to the third TP. We don't always have to. Sometimes it absolutely rips. Sometimes you only get one or two, and sometimes you don't get any and they don't play out. It really depends on context and a lot of other things. That's why I like to pair these harmonics alongside price action. So that way I have additional confluence with my bias. All right, so this is a good example of a bullish bat harmonic. That's how you would drag out the tool. Let's take a look now at a potential bearish harmonic, and I believe we have one here, if I remember correctly, on like a potential shark. So I think if you drag from this high, so again, if we're doing it bearish, you're going to start with the opposite. Your high is going to be the first swing. Then I would go to this low here. This is a little bit short, but we don't care too much about this. Hold on, we'll take a look at this in a sec, but we don't care too much on sharks about the X to B retrace. It's not as important. Sharks I always like to color blue because it's like the ocean. But we do have a valid 1.3 would be pretty much valid for the shark. This actually, whoops, I would be totally valid because it's within the 1.0 plus or minus 1.05 or 0.05. So it's just shy of 1.3, which is fine. If you were to invert your chart, you can see it's still the same idea, the low to high to then like your reaction from the PCZ. Sharks can go to an 886 retrace or a 1.13. So again, just in terms of bearish would be the inverted version of what you would look at on bullish. So this would be your PCZ on the daily. In terms of low time frame, if we go to 4 hour, again, apologies, it's going to get a little funky for a sec. Let's go back in time. Yep, here we go. All right, so this we can see, yeah, you had basically almost like a falling three peaks, which is just kind of like your textbook retail pattern. But the point I'm trying to make is you don't always get necessarily a confirmation low or high that takes out the previous high. You could argue in this case this would be like your confirmation high. And then maybe on lower time frame you would have that sort of additional bias in terms of taking out key levels or filling imbalances or reacting from order blocks to go alongside your bias, right? So that would be your PCZ, arguably your confirmation high here. Your first target again would be B. It's always going to be that middle section or that like inverse key reaction point in terms of when we're bullish, it's higher up here. When you're bearish, it's going to be lower. So that would be TP1, which we smashed on the way down. TP2 would be here, which we had a fair value gap. Here we had some sell side liquidity. And then TP3 would be ultimately the external sell side liquidity here. So in this case, we hit all three. This would be a great bearish bat harmonic. And you can see when you have these high time frame harmonics at the extremes. So as we can see from history, if we look back, this is the 2020 to 2021 price action basically. On this run up, we ultimately then reversed or created this harmonic at the top. So bearish harmonics at the top of ranges or price moves are ultimately very high probability. And then inverse, you would have, like, for example, we had that bullish bat, but because we're at the top of this move, we didn't get all three TPs. We only got two. So it's not as high probability. We want the bullish harmonics down here. Okay. But ultimately, you can see then how we went way further down and ultimately took out a lot of key levels on the way down. So if you get these high time frame daily, even sometimes weekly harmonics, you can catch some really nice swing trades if you have the right conditions. So this would be a prime example of a bearish harmonic where, again, in terms of how you would size it up for trades, depends on how you trade it. If you want to be a little bit more loose in terms of what you're looking for, so if we got our reaction from the 886, we had this big down candle, you can maybe look for an entry off this order block on a retest, which we got, I think, that next day. And then my stop personally is always above X at least. X is always going to be invalidation of the harmonic if you take that level in terms of sweeping a low or a high. In this case, since it's a bearish harmonic, this would be a high. And then ultimately we would have the different targets on the way down. So even if you got out at this external sell side liquidity, that's almost like a 4R trade. Obviously, this is going to take, looks to be from May till August, so about like 3 months would take. But if you're a swing trader, you can obviously size up a bit. But also, had you gone in on, let's say, M4, and again, just excuse me while I go back to this, we can look to see, okay, so on, not M4, sorry, H4. H4 is showing us here, we basically had like you took the high, then you broke the low. You could probably look for an entry where we filled this imbalance here, and maybe retest that breaker with your stop above the high. In this case, that would be like an 11R trade. Not saying that it has to do that or you have to take trades like that. You can be because sometimes you may come up and you may clean up the PCZs and take, or the PCZ and take the highs or the lows and rate it, but other times you don't, and you can really capitalize on this and combine these harmonics with your style to trade in various ways. But I just wanted to show how to use both of those tools. So again, the XABCD harmonic, which I'll just kind of show how you would mark it up randomly on like another harmonic. So imagine this would be like your BAT, your 886. Your C is always going to be lower than the A, and vice versa. If it's a bearish harmonic, the C is going to be higher than your A. And then that would be your PCZ. And then in terms of for your Cypher or your Shark, it'll be more something like this. Yeah, Shark would be around the 1.3. And then you could have maybe an 886, or maybe you get a deeper retrace to the 1.3 down here, something like that. All right, so those are the two different ways to use the XABCD tool and the Cypher tool. If you have any further questions about that, feel free to hit me up and I will be happy to explain further. Otherwise, have a wonderful rest of your day, and hopefully this helps you use harmonics. Peace.